Good morning and good afternoon. My name is Trang, and after our short summer hiatus, it's my greatest pleasure to welcome you back to today's Refinitiv Perspectives live stream. Urbanization, rapid population growth, and economic expansion are creating an ever greater demand for new and resilient infrastructure, especially in developing countries. The Asian Development Bank estimates that 1.7 trillion US dollars will have to be invested annually in infrastructure across Asia until 2030 in order to maintain the region's economic growth, tackle poverty, and eradicate climate change. And yet, the infrastructure demand and supply gap continues to widen. The challenge isn't just to fund the massive investment required, but to create projects that are affordable, socially equitable, and environmentally sustainable. And COVID-19 has only served to further exacerbate some of these pre-existing challenges. Because of their interconnected, complex, and global nature, the pandemic has significantly disrupted industry supply chains and workforces, which in turn have impacted the schedule and costs of infrastructure projects, with delays potentially leading to long-term economic repercussions for host economies. So these will be some of the issues and challenges we'll be discussing today. And it's my pleasure to introduce our guest for today's episode, a person I admire greatly for her uncanny ability to turn complex topics into something completely understandable and relatable to a wide range of different audiences, and who brings a wealth of expertise on global infrastructure. So please take this opportunity to really ask her any questions you might have around this topic. And please welcome Sherry Madera, Chief Industry and Government Affairs Officer for Refinitiv.
Hi, Trang. What an amazing introduction. Thank you so much.
Thanks for joining us today. And I guess I wanted to kick off our conversation with a question that I think really forms the basis of this episode, which is, what has COVID-19's impact been on global infrastructure?
I think that, number one, we need to start thinking about sort of how COVID-19 is really affecting the world. It is a global health crisis, first and foremost. But as we all know, we're shifting rapidly into a major economic downturn caused by this pandemic. And that those economic tentacles are reaching far and wide. And of course, the infrastructure sector is being affected as well. I think one of the most telling changes or pivots that COVID has had on the infrastructure sector is the increased scrutiny on resilience. And what we mean by that is resilience, not only in terms of financial resilience and understanding if these projects are remaining viable and bankable and investable, but also how is it that these projects are going to be able to respond to shocks coming forward, environmental, social? We've seen the pandemic shock, and I think this has brought that concept of resilience right to the fore. In general, I also think that infrastructure is playing a new role in terms of how the governments in the world are seeing infrastructure. There was already an uptick in interest for infrastructure to promote growth. This is a tried and true path for governments. When GDP is flagging, the idea of creating some significant infrastructure projects is very appealing. It's something that has been a path that's been well worn. But now, post-COVID, I think that there's an even more acute focus on that, and thinking about how government can and really spur that and play a role and create a positive platform. Do they have the tools? That remains to be seen. Do they have the financing? That remains to be seen. But I think the interest and the focus is increasing, and that's definitely become sharper since COVID has hit. However, just so that we're not all thinking, goodness, things are really rocky in this sector. Historically, infrastructure debt has performed incredibly well in times of market stress. And obviously, this is because it is a stable, it's a long-term asset class. It's something that creates sort of a bit of a smoothing effect in terms of an investment portfolio. And we are seeing that, but it also depends on what subsector of the infrastructure sector you're talking about. Infrastructure could mean transportation to one person versus energy to another, versus even communications or fiber infrastructure to another. So it really does depend on what it is we're talking about, Trang.
Thanks, Sherry. And I think we'll touch on telecommunications later in the episode. But what I think I picked up on is when you mentioned funding. And I think that's really the $1 million question in the room as well. In my introduction, I touched on the gap between demand and supply, but also the funding challenges. What do you think is the solution to really plug this funding gap?
Yeah. So of course, the funding gap that you referenced from ADB is often quoted, and it's not new. And this funding gap, and let's make sure that we understand what we're talking about here. We're talking about the gap between what is predicted as the needed investment in infrastructure globally versus what is already sort of been identified as possible infrastructure spend. And most of that infrastructure spend that's been identified going forward is in sort of a quasi-public domain. So be that governments, be that multilateral development banks, be that sort of structures that are using guarantees in order to be able to put that public coffer to the fore. What has always been elusive is this concept of crowding in private finance or mobilizing private capital. And up until COVID, this was a topic that was pretty much on every single agenda when you talk about anything to do with infrastructure projects. It remains almost even more important to try and crowd in that private finance. But there's always been these incredible barriers to doing that. And part of those barriers are the viewpoint on returns. Private investors are looking for returns. So, the problem is not the pipeline of potential deals or the fact that there is infrastructure projects to be invested in. It's about, are they bankable? Are they investable projects? Are they projects that are actually going to meet the requirements of a private sector lender? Again, I think that question remains. All that being said, if we look at project data and project finance loans in the first half of 2020, we see that deal volumes remain stable, which means that this COVID-19 scare has not sent deal completion off a cliff. But versus the same period last year, the deal value has fallen. And so I think that there may be an element of caution that's going in there, and potentially some of those private investors who are looking at their entire portfolio, not only infrastructure, but the other assets that they're holding, are taking another look at the resilience of the infrastructure investments they're holding now.
Okay. And I think in your previous answer, you mentioned the importance of resilience. And I think we can all agree that COVID-19 has demonstrated how negative supply chain disruptions and workforce disruptions can be. And as a result, I think it's increasingly important to really think of diversification and operational resilience. What kind of fundamental shifts do you see as a result in global supply chains?
This is not just for infrastructure. Obviously, this is now a new global focus in terms of how our supply chains being disrupted. It comes from everything from, the fact that perhaps in some of the emerging markets where we're getting quite a lot of our supply of various different goods and services, that actually the workforce is no longer where it needs to be to work. We're seeing a lot of that in India. We're seeing that across Southeast Asia. And so supply chain, when we talk about, making sure and guaranteeing and the resilience in your supply chain, right now, it becomes very, very difficult in order to get that comfort. But if we're looking at sort of the infrastructure more specifically, I think it depends on where the project is in its life cycle. As we all know, infrastructure projects are very long in terms of from start to finish. They're decades in the making. If you include some of the financing, often that tacks on another decade. But if we think about it, earlier stage projects, those that are still greenfield, those that are still being scoped, those that are perhaps just breaking ground, I think that they are getting even more pressure on ensuring this resilience concept and trying to balance out sort of that just in case versus just in time delivery for infrastructure. So I think that that's one critical piece. The second is simply that infrastructure takes a lot of lifting. And what I mean lifting, I mean people lifting. There are a lot of contractors that are involved in the supply chain of delivering an infrastructure project, be that sort of a new power plant, hopefully a renewable energy power plant, be that a transportation infrastructure, et cetera. And the movement of people right now, as we are all very acutely aware ourselves, is limited. And so therefore, trying to understand sort of how that supply chain gets recast so that critical infrastructure projects don't lose momentum, and that we can continue both with the physical capital and the human capital that are needed. I think this is a really critical piece. And finally, I think that we can't forget that COVID has also spiked the amount of fraud that's happening globally. And so therefore, early stage projects or projects that are moving into a new phase of contracting supply chain inputs are finding a challenge in terms of doing their due diligence and making sure that not only is the product going to arrive, but actually the quality standard and the environmental, social, and governance requirements are being adhered to. Lots of challenges in that supply chain question, Trang. I probably added more questions than answers.
I know, I feel like I have like 1,000 more questions that I wish I had the time to ask you, but I think like your answer is actually kind of going right into my next question, which is something that's very important to me, I think personally as well, which is really around sustainable recovery for infrastructure projects and the fact that operational and financial resilience is important, but what about climate resilience for infrastructure and what your thoughts are on how much this is possible, because I guess traditionally speaking, infrastructure projects have always received a lot of criticism in terms of their environmental impact, in terms of labor conditions, and you touched on the issues of fraud, corruption, and transparency. But can perhaps COVID-19 in that sense provide us with a new direction and a wake-up call?
Well, I don't think it's COVID that's giving us the wake-up call. I think the drumbeat towards a green infrastructure future has been beating pretty loudly, particularly over the course of the last 2 or 3 years. But I think, of course, COVID now brings everything into sharp focus so that if you are deploying capital, you should be deploying capital in a way that is green, sustainable, resilient. And I'll bring a couple of comments to the fore. Europe, often we don't look at Europe as being sort of the epicenter of infrastructure investment. We often think about emerging countries. COVID has put the challenge in what is an emerging country these days? I mean, in terms of GDP growth, it's Europe who's the worst hit in many respects. And so when we look at Europe's recovery, and back about a month ago, European politicians agreed to an astounding 750 billion recovery fund within the Next Generation EU fund. And why this is important is because that EU fund has also not compromised on the EU's Green Deal requirements. So in terms of a policy and in terms of a framework, it's looking at that money being deployed so that it is environmentally, socially acceptable. And so we've coined the phrase, we've written a few things about the just recovery. And I think that this applies not only to Europe, but it's starting to ricochet around the world to start thinking, if we're going to be deploying this level of capital, and so many of the countries that are involved are also starting to commit to net zero targets in relatively short order, 2030, 2035, 2040. All of this starts coming together as a bit of an inspiration to say, well, perhaps in this time of need, time that is definitely needing GDP growth and infrastructure being an additive to that, let's make sure that we actually do this in the right way and that it is a just recovery. I think that part of this is also to quell any of our listeners' fears that actually the sustainable debt market, what's that doing? If it's not able to be robust enough to support this, then it's all kind words and not reality. The reality is the global sustainable debt market surpassed 270 billion in the first 7 months of 2020, and that's up 5% from 2019. And anything that's in positive territory, I think we're all as humans, keen to celebrate. But let's put that in context. Last year, in 2019, over the course of the whole year, the sustainable debt market increased by 75%. So I think this year is muted, however, still going in the right direction. And again, obviously, I think investors are still finding their feet over the course of the first 6 months of this year. So this idea of a sustainable recovery, I think it has already had long legs. I think governments are very much pushing for it, and the market is ready.
Great. I mean, that's the answer I wanted. I think my next question is really around US-China tensions, and I actually see a couple of questions coming in around the Belt and Road Initiative, so I'll turn to these in a short while. And I guess just for our listeners, if anyone has any further questions, feel free to put them into the chat box. But my next question is really around, with US-China tensions increasingly rising, do you see more potential for international, regional, or I guess also cross-sectoral collaboration on global infrastructure projects?
Well, and we haven't talked about the Belt and Road yet, which seems astounding, considering how hot a topic it has been since it started in 2013 by President Xi in the middle of Kazakhstan, launching it and then relaunching it down in Indonesia, the Maritime Silk Road. So, over the course of the last 7 years, this concept of the BRI has become quite mainstream when you're talking about infrastructure investment. And in terms of the current geopolitical situation, China's focus on the BRI, it remains, and it's a 100-year project. If you look at some of the quotes from President Xi over the course of the last few years, and it's a project for joint prosperity, and to be able to build out that prosperity over sort of networks that perhaps really need that infrastructure to bring growth to other countries other than China. Of course, there's definitely a direct benefit to China should those supply chains and some of those projects work in the way that is positive for all. That being said, I do think that BRI has become quieter. And that could be for two reasons. One is that China's current account and how it's been financing quite a lot of the early stage BRI projects. Well, that current account's gone down quite significantly over the course of the last year and a half. So in terms of the coffers for being able to deploy money on the BRI, that's waning. But frankly, the pressure from international governments and international players on making sure that the BRI was being sustainably financed and making sure that there wasn't an undue debt burden on the countries that were receiving this funding to do these projects, that had already been mounting. And so therefore, this challenge in terms of making sure that there's a debt sustainability had already been well mainstreamed before COVID. So I think that there are a few reasons why we're not hearing as much about BRI. Now, in terms of the US-China tensions, last year there was launched another initiative called the Blue Dot Network. And this is a network led by the US, but supported at launch by Japan and Australia as well. And it's an initiative that is hoping to be tabled at the G7 and include other nations in it, which is similar in its intent to the BRI, i.e. that it's looking at trying to create a platform for deploying capital to infrastructure investments. And it's at its core tenets, the Blue Dot Network, the Blue Dot Network starting with B always causes problems. But it's focused on quality. It's talking about standards. It's talking about how is it that you can create a benchmark? How can you create a seal that says that this project is good to go? It meets the objectives of investors and that it is meeting the criteria for resilience and sustainability. So again, I think that all of these initiatives are continuing. I think that COVID has potentially pushed some of the discussion about cross-border infrastructure investment to the side, while domestic infrastructure and attracting funds into each separate country is what has been the focus for governments over the course of the last few months.
Okay, thank you. And I think previously you touched also on this potential pivot to, I guess, projects which we wouldn't necessarily consider as part of infrastructure. And I think one of it perhaps would be digital projects as part of BRI, but also I think more broadly, looking at providing access to the internet and telecommunications. Do you see this pivot as something more long-term, or can you tell us more about it?
Yeah, I think there's two ways for us to look at this. And again, it's emerging thinking, particularly post-COVID. But the digital Silk Road was a concept that was part of the BRI discussions coming out of China for many years now, and has been a priority in order to be able to create connectivity for communications, for knowledge sharing, et cetera. And there really is a global need for creating infrastructure that's going to create that connectivity more reliably. What COVID does is turbocharge that thinking. Frankly, the explosion of the use of internet, video sharing, even what we're doing here, I think that is something that we're all familiar with, and all of our listeners that do it 8, 10, 12 hours a day potentially, and that all takes its toll on the bandwidth of that's being offered, particularly when you're doing it cross-border, and perhaps in areas where that bandwidth has not been invested in as in more mature markets. So I think that there will be a pivot towards communications as a focus area. However, this is also still very hot territory in terms of geopolitics. I think most people are familiar with the story of Huawei and the resistance of the U.S. on welcoming connectivity with any Huawei equipment, be that within their borders or in other networks around the world. The Clean initiative is not just directed at Huawei, but other providers that the U.S. don't see as being secure. And so I guess this is one of the challenges to infrastructure build out. How is it that you can make sure that's something that is truly connectivity, as opposed to actually creating factions depending on who your suppliers of that are?
Okay. I think I might turn to one of our audience questions, which is looking at BRI. So the question is, if you look at BRI exposure to countries with no credit rating, has the risk of default impacted on the funding of these new projects?
Well, we have a Belt and Road database. So this is something that we have been watching and sort of seeing how that's transpiring. I think it's still early to see sort of how the ramifications of this are working out. Obviously, no credit ratings have been in existence for many years, but it's become much more acute now. And in some ways, investors are also pairing credit ratings with perhaps the view from the IMF or some of the other review bodies to determine sort of what the future looks like for these countries versus the past. And again, if we think about it, some of these countries with no credit rating are perhaps in Asia. Asia is actually the only region, if you're going to be able to call Asia, which is difficult to define in its own right, that looks like it may come out of 2020 with some positive growth. All of the other regions are negative territory. So again, I don't think that the history in terms of ratings and in terms of some of the inputs for some of these less dense information countries is going to be able to be extrapolated. I think that post-COVID, the new normal means that there are a lot of alternative data sets that are being used to assess the debt viability and determine it from there. Do I think it's going to be as robust a opportunity as we saw perhaps in 2019 to pursue some of these projects in very emerging and developing markets? I think that investors are taking a pause and determining where it is that they're really deploying capital.
Okay. And I think the next question from the audience actually relates to something you mentioned before on the role of private investors and profitability and everything along those lines. So the question is, infrastructure takes a lot of funding, time, and lifting, physical and human capital, and often doesn't meet private investors' return expectations. What role can investors play in advancing these projects, like Elon Musk or Bill Gates?
Well, I think that you have to ask Bill and Elon for their opinion. But I think that there are returns to be had in infrastructure. I think that in a time like we're experiencing now, very long-term projects that have solid projections can be incredibly attractive. And so those private investors can look at those opportunities and assess it over a long period of time. We talked earlier, about early stage infrastructure investments or trying to attract capital into new projects. But the reality is most infrastructure projects are in flight. And if those need to be recapitalized, there may be opportunities for private investors to have an excellent return. The rest of the world, we have to remember, is heading into negative rates territory, or at least incredibly low interest rates. So, it almost becomes a marriage of, what do we do with our capital, and is this an area where actually we can get not only returns but stability?
Hopefully this answer satisfied our listener who was asking that question. And I guess I had a final question, which is really looking towards the future. Looking ahead in the next 5 to 10 years, what are your predictions on what investors will be looking for in the infrastructure space?
Yeah. So I'm going to pick a top three. Three is always good. First one is sustainable investment. It's not going to be a nice to have, it's going to be an absolute must have. And when we talk about sustainability, I think that it spans all three areas of the ES&G: environmental, social, and governance. This is not going to be a tick box exercise. This is going to be a much deeper dive. And investors and governments across the stack need to be comfortable that those are meeting the right criteria levels. That's number one. Sustainability is no longer an option. Second one is resilience, and how that's different is thinking about sort of the financial resilience. So going forward, I think that a toll road that used to be able to have a very determined yield going forward is going to have to be looked at again, particularly as the world of work and the world of human life changes post-COVID. We need to see what sticks. And so I think the metrics that are being used in order to determine resilience, the data that's being used in terms to understand resilience, is entirely different than what it was before. It's not only so that historical data, historical patterns, historical trade, historical movement. It's projecting where that's going to be in the future. So a new resilience assessment is going to be key. And the third is that governments and quasi-governments are unfortunately going to play a bigger role in infrastructure going forward. Everyone had hoped that the crowding in, the blending, the private sector was going to take over some of that role and be able to release some of the risk capital that the MDBs and governments were supplying. My prediction is actually that is going to go the other direction, and actually investors and private sector are going to be demanding more guarantees. The likes of MEGA, the likes of some of the guarantees that are coming from the MDBs that have got AAA ratings. And the pivot will be more on a reliance towards government support.
Okay. So I wanted to wrap up, but I see one final question come through, and I think it would be quite interesting to answer them. So we have a couple of minutes. And the question is, what new health-related infrastructure do you envisage in the near future?
Yeah, good question. I mean, when you say health-related infrastructure, again, that covers a wide church. Health-related infrastructure also includes transport. Being able to deliver vaccines, being able to supply PPE, being able to get what is being produced in point A to point B. So I think that will have an effect on infrastructure investing. How that health value chain needs to be supported. And if you think about health infrastructure itself, so the pharmaceuticals industry and making sure its supply chain is viable, perhaps that is a screen by which investors can consider, how is it that their infrastructure project is going to tick that box? Is it something that is going to be able to be supportive of the health industry, which obviously is going to be quite focused, or not? But finally, it's that point about just in case versus just in time. So I think that there is also a real consciousness of governments and societies to be able to access the absolutely critical needs that they would have. And of course, those health needs have become very much squarely in the center of those requirements and those plans.
Okay. Thanks so much, Sherry. Lots of food for thought, and I wish we could continue this insightful conversation. But I think really the three key areas that you mentioned around sustainability, resilience, and the role of governments, I think are great suggestions and predictions for the future for all of us to really think about. So thank you so much for joining us today. And I just wanted to thank everyone else who was listening in for participating. I think if you want to find out more about global infrastructure, we're actually holding a webinar on the same topic on the 17th of September, so next Thursday. So you can actually, I think, scan the QR code on screen or check the link in the chat to get to the webinar page and to register if you would like to. And as always, do follow our social media channels to get notified about our next episode. And I look forward to seeing you online soon. Thanks, everyone. Take care.